Hello everyone, this is Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool. One of the hottest stocks in the market for 2018 has been Avon products. However, that's a short-term statement because if you look at this company long-term, it's really been kind of an abysmal business as well as an abysmal stock. So let me go over the fast graph going back to 2000 and show you that how this multi-level marketing company, one of the leading, household product brands in the world, has done. Now, historically, there was a time when Avon was growing very rapidly, as you can see from the end of 1999 all the way through 2005. Then they had some hiccups, and then we came into the Great Recession, and since the peak of December 2008, you can see that the company's earnings have been in a virtual free fall. Earnings fell from over $2.13 a share in 2008 down to a mere penny a share by 2015. Now, I'm going to add a couple of pieces to the graph now. I'm going to add the company's dividends and illustrate the dividend payout ratio. What I want you to notice here is you can see dividends actually grew pretty nicely from 1999 or the end of 1999 up through 2011. Then in 2012, they slashed their dividend by about 18.5%. Then they slashed it by another 68% in 2013, and then finally by 2015 they cut their dividend altogether. So, you can see that the company's dividend record has also followed really the abysmal operating results that the company generated. Now, stock price follows earnings. I've made this statement over and over again. You can see this has been a very volatile stock with a lot of inconsistency in its earnings. But, if you look at it from a trend line point of view, certainly from this peak or even this peak to the most recent valuation, this has been a horrible investment. Investors would have lost over 91% of their money since August of 2008 through yesterday's close, an annualized loss of 14% annualized or 14% per annum analyzed. However, now let's look a little closer. Let's shorten the time frame here a little bit so I can draw this. And let's look at just what's occurred since the beginning of 2019. So here's December 31st, 2008. And then here I'm listing yesterday's closing price, May 28th of 2019. And you can see very clearly that we've had about 154, just under 154% capital appreciation. Of course, no dividend income. Now that's a very strong annualized rate of return. But, it's not really fair to analyze this company. Now, if you look at this company going forward here, and this is, I think, important, there are very high estimates. The estimates are for this year to be about 280%. Now, this company has gone through a lot of transformation. They've restructured. They've, spun off their North American operation, which I talked about in the written portion of this presentation. And so analysts are expecting 280% growth this year, 74% growth in fiscal year 2020, and then another 59% in 2021. So now when I look at the forecasting graphs, you can see that, it's rounded to 300%, 67, and 60%. And that would indicate that this company has tremendous potential going forward here. So if it were to stay an independent publicly traded company, and if it were to grow at the consensus of leading analysts, there could be an enormous rate of return, assuming that it traded at a PE ratio equal to the company's growth rate. So in this case, we're drawing the orange line at a PE ratio of 51.7. If you look at it historically, the historical PE has been about 57. So these numbers are consistent with history. However, I want to point something out. When I look at the long-term history of this company, it did go from a value trap to a growth stock, as I indicate in the article. What I mean by a value trap, the point is the PE ratio was really low, down to 8 by 2009, and that did result in some, pretty substantial short-term performance here, as you can see. However, as earnings collapsed, this low PE ratio, based on $2.13 worth of earnings, turned out to be an extremely high PE ratio when you measure it against forward earnings of only a penny a share. In other words, the collapse in earnings led to this collapse in price. Stock price will track earnings over the long run. Now, the real question is, Are these earnings going to manifest? Is the company going to grow going forward? But most importantly, they've announced this fact that they're going to be acquired by the Brazilian company, I guess it's pronounced Natura. And the reality of it is this company, Natura, has not traded on a U.S. stock exchange since 2015. It still trades on the Brazilian stock exchange, and it actually has a decent record more recently. So let's take a quick look. Let's go to Bloomberg here. And let's look at this new company, Natura, from the standpoint of what it's done over the last year as a Brazilian company. So looking here at Bloomberg, let's go ahead into Natura and look at it. Now, in Brazilian dollars, whatever they're called, I really don't know. It's trading at about 61. If I look at the performance over the last year, you can see that the stock has done pretty well. But it's beyond me to be able to translate that into US dollars, whether or not it's how it relates to what it traded at on the OTC exchange back in 2015. So there's a lot of questions here. I wrote this article because it's become a very popular stock here recently, Avon has. I think a lot of it has to do with the attraction of how the stock price has really rallied so much so far in 2018, and the fact that earnings estimates are very, very strong. But there's a lot of uncertainties here. So as I said in the article, you might invest in the future potential growth, but then you're also speculating on the takeover by Natura. Anyway, this has been Chuck Carnevale saying thanks for watching. I hope you got something out of this. I think the real issue here, and the one reason I really felt compelled to share this story, is to simply show an example of how a company's operating results will translate into shareholder returns over time, and you can clearly see that with Avon. So is it a value trap that's now turning into a growth stock? I'll let you guys decide. By the way, if you like this video, don't forget to subscribe. Hit our subscribe button here. Thanks for watching.